Hey guys, Dave with Moniology here. Hope everyone is having a great day. Today is December 25th, 2017, and this is the energy sector review on this Christmas Day. Merry Christmas to those of you who celebrate. For those of you who are new to our videos, what we do is we take a look at these charts from weekly perspectives. This gives us a better understanding of the longer term trends in the market to help us remove some of the noise in the day-to-day fluctuations of the various different charts that we look at. So let's take a look at what's going on in the energy space. So having a look at the WTIC crude oil contract, what we see here is that it looks like oil is ready to break out above 60. We predicted that. Now on the one hand, we broke this uptrend here that we had since July, which we called very well. And now we've consolidated for a couple of weeks, and this has been a great consolidation because it was one through time versus one through price. And now it looks like the momentum has started to rebuild and lead towards a break above that 70 on the RSI. Once that happens, we expect that price is going to hit at least 65 before meeting any serious resistance. So there's a lot of opportunity in the energy space. The more junior that you go, the more that you're going to find some great opportunities. And look at the accumulation. I mean, this has been huge ever since 2016. This is basically hasn't let up. Now, on the one hand, you might say that's a lot of speculation that's in the market, maybe, but the price and the technical suggest we're moving higher. Oil is the ETF that trades this particular index, and as you see here, it looks like it's getting ready to march towards 7 here. And once again, it's successfully tested the 60 area from the upside, and now it's from the upside, and looks like it's looking to break above 70. And I wouldn't be surprised that before this rally is over, we're going to see this particular price point around 9 to 950 area be touched before any sort of change in direction takes place. Now the main energy ETF is XLE, and this one's starting to really take off. I mean, it's being led by momentum, and it looks like it's about to break this 70 mark. And if it does, the first price target here that we expect to see is around 75. If it can break that point, that would be our cue to go long this particular index. On the one hand, if you already own it, this could be some resistance and you might want to take some profits. On the other hand, if you don't own it, this is not a good risk reward at this point to buy because there could be some very strong resistance at this point. But if this were to break out, this is the cue that the next leg higher has indeed begun, and you want to go long to ride the momentum. Next on the list is the Vectors Oil Services ETF, OIH, and this one has been beaten down. Unlike XLE, this one hasn't rallied as much as the XLE has, but it's finally broken out above this downtrend. It's tested successfully this downtrend from the upside, and it has had a very nice week last week, and looks very strong to move, in our opinion, at the very least towards this 35 zone. It's being led by momentum. It finally broke above the 50 level after 1, 2, 3, 4 attempts. It finally broke out, and it's really running right now. Momentum is leading price action. MACDs are starting to firm up here above 0, and so this one has a lot of upside potential. We like OIH. RYE is the equal weight energy ETF. This one is good because what it does is it doesn't allow several of the leaders mislead the index. It basically represents what the entire index does, and you can see here that by the looks of it, it hasn't been as strong as XLE, which tells me that in XLE there's a couple of names that led the index, whereas here the energy sector as a whole hasn't really moved in large part with this overall rally in oil, but it's starting to, and that's a very positive development. And look, 1, 2, 3, 4, fourth time is the charm, it looks like, and it looks like it's getting ready to break above the 60 to 61 level on the RSI. Likely headed towards 65 here, 65, 66 to test this double top area before possibly headed higher all the way towards 75. XES, Oil and Gas Equipment Services ETF. This one's been consolidating since August after breaking out from this downtrend, and now this too looks ready to take off. It closed the week above the 50 on the weekly EMA, and it's again also being led by momentum here by RSI. So a break above 17 likely sends shares towards 2022 area, and ultimately I expect this to hit 25 before this run is over. Now the oil and gas exploration and production ETF XOP also looks strong. Has been building a stair-step pattern here higher, and now it's been consolidating and looks like it's getting ready to move higher. Expect this to run towards 45 and possibly as high as 55 before this particular rally is over. Finally, small cap energy portfolio PSCE. This one looks very good as well. As you see, it's not been as strong as some of the large cap names, but it's starting to break out above 15. This is a buy, and we like the risk reward with a stop loss below the middle Bollinger Band, so your downside is relatively limited. Your upside 22.5 at a minimum, and possibly going towards 25. Anyway, guys, this is it for the energy sector review. Bottom line is this energy space is still very hot, and there are a lot of opportunities that you'll find. Look and do your due diligence on individual names. We've got a watch list of well over 100 names, and many of them look exceptional. And we post these from time to time on Twitter and on StockTwits, so do follow us. And if you like our videos, please subscribe to them on YouTube. And if you like the work that we do and you want to support it, please send us your token of your appreciation through the Patreon campaign. You'll see a link to that in the show notes. Thanks, guys, and have a wonderful week.